The United States Treasury just dropped a report literally overnight that could change everything for stablecoins and crypto. And they're projecting a $2 trillion stablecoin market by 2028. But there's a catch. What is up, everybody? Solomon here. Super excited to be with you all. Well, we have kind of stumbled upon another ridiculous document here. This just coming out overnight, and I'm going to share this with you right here. This is a digital money presentation from TBAC. You can see the hyperlink up here from Department of the Treasury, the United States Treasury. TBAC is the Borrowing Advisory Committee. You can look and see who some of the members are here. Managing Director or the Advisory Board of TBAC, Managing Director of BlackRock, Bridgewater Associates, Goldman Sachs, PNC Financial, Morgan Stanley. Morgan Stanley has some other interesting crypto news today as well. Deutsche Bank, BNY, you get the picture. JP Morgan, some Vanguard, some pretty heavy hitters in here, right? This document is really fascinating. So what we essentially have here is the Treasury Borrowing and Advisory Committee literally saying that given the green light of regulations, stablecoin market may be on track to hit $2 trillion by 2028. To put into context, the stablecoin market right now in crypto is at about $234 billion. So that's almost a 10x. We're going to be going over some numbers as far as what that could mean for the rest of the broader crypto space, excluding stablecoins. But I wanted to show this document to you first. Just came out again. Luckily stumbled across it, but April 30th, 2025. This is the executive summary here. Stablecoins, a market cap of $234 billion, are ubiquitously utilized as cash on chain, effectively serving as a new payments mechanism. An emergence in tokenized money market funds has recently created an alternative option to stablecoins, primarily given their yield-bearing feature. Evolving market dynamics has the potential to accelerate stablecoins' trajectory to reach $2 trillion in market cap by 2028. USD peg stablecoins dominating the market, over 99% in market cap, driving near-term focus on potential legislation. Within the currently proposed legislation, which is the Genius Act, which I will go over here in a second, there are several factors that are still being determined, which influences the pace at which demand may grow. Now, the entire time I'm kind of thinking about this, and I obviously see stablecoins as, and clear-cut regulations for stablecoins, kind of eliminating one more point of attrition for people coming into the digital asset space in general. Obviously, if you're holding digital representation of the dollar like USDC, it becomes that much easier to kind of engage with non-stablecoin assets in the digital asset space. So what are the potential impacts on bank deposits? What are the potential consequences for treasury markets? What are the potential implications on monetary supply? Interesting little point here. Demand in stablecoins could have a net neutral impact on the U.S. monetary supply. However, the attractiveness of USD pegged stablecoins could drive currently non-United States dollar liquidity holdings into United States dollars. And how could this potentially affect existing market structures? There's a lot that goes into a document like this. Obviously, you have extreme heavy hitters kind of putting together the impacts of clear-cut stablecoin legislation in the United States. It's an 18-page document. Essentially, this Genius Act breakdown is they go over federal versus state issuer rules. We did a little bit of a breakdown of the Genius Act here that I'll show you guys in a second. Reserve requirements for short-term treasury bills. The ability to freeze, burn, or block transfers if legally required. Implications of stablecoins as cash, not yield-bearing savings instruments. Wide spectrum of digital money implementations is what the TBAC committee at the Treasury is going over here. Tokenized deposits. You can see cryptocurrencies. We've got Bitcoin, Ethereum, XRP, Tether, BNB showcased here. Trigger solutions, CBDC. Man, what's amazing to me is I think, we see documentation like this come out. We see the heavy hitters that are involved in these markets. And the only thing that the mainstream media talks about is the polarizing aspects of What is Bitcoin doing? How are digital assets potentially being used for fraudulent activities? Meanwhile, you look at traditional financial instruments and how widely used they are for scams and all sorts of nefarious things. Crypto is transparent. Like, these distributed ledgers are transparent. Unless you're dealing with like an inherently private ecosystem, most of these blockchain networks are totally transparent. So when we talk about the ability to actually measure, if scams or fraudulent activity is going on, one would think we would move to a system that enables people to just be more, have more accountability for their finances and the ability for the powers that be to maintain that level of authority where they, I guess, need it. But yeah, stablecoin market is rapidly amid renewed institutional interest. The evolution of global regulatory frameworks and the development of broader on-chain applications and use cases. So outside of just stablecoins, they're saying the technology is legitimately developing. Real-world adoption is coming. It's already here, and we're just starting to scratch the surface. Rapid growth in digital money market funds have catalyzed an alternative stablecoin narrative, despite obvious differences. You can run down the gamut of that. The art of the possible of stablecoin use cases could look like for financial institutions. Financial institutions could potentially issue a stablecoin, settle on-chain digital securities transactions, manage stablecoin reserves, enhance treasury and collateral management, cross-border payments and cross-currency swaps, trading versus stablecoin reserves, serving as a banking partner for stablecoin providers, and managing reserves. I don't understand how the mass populace does not see that the writing is on the wall with what's about to happen. Stablecoins could witness exponential growth in response to market and regulatory breakthroughs. Migration of wholesale market transactional activities on chain. Strong business fundamentals and structural changes suggest this is literally the Treasury Borrowing Advisory Committee saying this stuff. Migration of wholesale market transactional activities on chain. Strong business fundamentals and structural changes suggest a clear path for tokenization, with the tokenization market, excluding stablecoins and tokenized deposits, forecasted to reach $6.4 trillion by 2033. Excluding stablecoins, tokenized assets on these blockchains, the TBAC committee is saying $6.4 trillion by 2033. We just saw, I want to say it was Deutsche Bank, saying $84 trillion by 2025. We just saw Deloitte in a video I did a few days ago saying $4 trillion in tokenized real estate by 2025. Interest-bearing stablecoins. USD stablecoins dominate the market, driving a near-term focus on potential legislative frameworks. What are the potential impacts of stablecoin growth on bank deposits? What are the potential consequences of stablecoin growth on the treasury markets? You can see Ripple's RLUSD is literally already in this document from the Treasury Borrowing and Advisory Committee, right alongside USDC, USDT, and PayPal-USD. They are ahead of the game. If people don't think that the government understands the implications of what's going on with this technology, they're sadly mistaken. And I don't think that the majority of people out there understand what's really going on right now. Based on the publicly available reserve filings of the dominant stablecoins in the market, stablecoin issuers are estimated to hold more than $120 billion in treasury bills. What are the implications of stablecoin growth on monetary supply? How could stablecoin growth potentially affect existing market structures? Key takeaways. Stablecoins could grow to $2 trillion by 2030, and above it said 2028, in response to continued market and regulatory breakthroughs. The stablecoin market is primarily comprised of USD-pegged stablecoins, driving near-term focus on potential U.S. regulatory frameworks and the accelerated impact of legislation could have on stablecoin growth. Stablecoins could disrupt traditional banks by drawing away deposits. However, they also present chances for banks and financial institutions to create innovative services and to benefit from the use of blockchain technology. The ultimate design and adoption of stablecoins will drive the magnitude of impact that stablecoins have to the traditional banking system, as well as the demand for U.S. treasuries. Backed by traditional assets, cash and U.S. Treasury-backed coins, Ripple's RLUSD. kind of run the gamut here on this stuff. Jurisdictional comparison. All right, guys. So listen, I think the point that I kind of want to make today is you have the Treasury Borrowing Advisory Committee saying that regulations and market adoption are leading us towards a rapidly approaching future where we could see stablecoin growth, which right now is around 234 billion, move up to about $2 trillion by 2028. Now, one thing that I wanted to put into context for everybody today, and this is just a fun little experiment here. Right now, the total crypto market cap is give or take about $3 trillion, right? Right now, we mentioned about $240 billion in stablecoins taking place in that market cap. Right now, stablecoins at about 7.8% of the total crypto market cap, which sits at around $3 trillion. Projecting forward gets pretty interesting. If stablecoins were to grow to $2 trillion, and assuming they maintain a similar share, let's say 7 to 10% of the total crypto market cap, we have a few different scenarios. Let's say stablecoins are 10% of the market whenever they reach a $2 trillion market cap. That means the total crypto market cap sits around $20 trillion. Right now, we're at about 3. Let's say scenario B, which is a little bit more modest. Stablecoins at about 7.5% of the total crypto market cap. That means the total crypto market cap would be around $26.7 trillion. Actually, that's less modest. Let's say more C, more dominant. Let's say stablecoins have a more dominant share, 12.5% out of $2 trillion market cap. Total crypto market cap would then be $16 trillion. Again, this document just came out overnight. You literally have the Treasury Borrowing and Advisory Committee with juggernauts like BlackRock, Vanguard, JP Morgan, Morgan Stanley, across the board, pretty much with a fully fleshed out document. And I'm sure there's tons that I didn't even cover from within this, literally stating that we have more real world adoption that's justifying a push for regulatory clarity. I think the writing's on the wall, and we've been saying this for years. I know it's taken a lot longer than people expect, but you know, it's crazy to find this stuff on a consistent basis. I certainly recommend doing some deep dives into the Genius Act. We published an article on genfinity.io April 9th, stablecoin market explosion, how digital dollars are transforming global finance. We go over USDC and Circle. We go over Ripple's RLUSD. We go over Hedera's Stablecoin Studio and the growth of USDC on Hedera. Algorand and Quanto. So it's not just USD backed or pegged stablecoins. It's MiCA compliant stablecoins such as EuroQ, which I'm mispronouncing that, EURQ, USDQ, 2 euro and dollar pegged stablecoins compliant with Europe's MiCA framework, now live on Algorand. Stablecoin bridges, XDC, Chainlink. Next generation of bridges emerge using zero knowledge proofs and secure messaging standards like Chainlink CCIP. Trustless interoperability will scale even further. Liquidity will no longer be confined. Instead, it will be programmable, portable, and fully responsive to the needs of on-chain finance. Again, and here's the Genius Act here. U.S. strategic interest in stablecoins. The Genius Act introducing a clear regulatory framework, setting reserve standards, licensing requirements, and federal state regulatory collaboration. Such clarity encourages broader institutional adoption and ensuring compliance and mitigating risks associated with stablecoin operations. From what I've seen, I had the opportunity to interview Charles Hoskinson and Lehman Baird like maybe a month and a half ago at the Hedera conference. I don't think people really understand what's going to happen if we have clear-cut legislation around stablecoins. Think about all the online retailers that people use right now. Think about the Amazons of the world and everything else. Let alone the impacts on banking and what banks are potentially going to be able to offer up to their clients. And again, I think the bigger picture here is I know that stablecoins might not be a widely popular topic, but at the end of the day, they're kind of literally implied in the name, they're a stable means of onboarding into this ecosystem. You think about people building real world business use cases, leveraging blockchain and crypto. A lot harder to do that when you have an asset, like a native layer one asset that fluctuates all the time in price. Stablecoins certainly are very important in this space. I find it more interesting to kind of do some little elementary math as far as what might happen regarding kind of the stablecoin market share right now in regards to the total crypto market cap versus what that might look like at a $2 trillion stablecoin market cap. And then we mentioned Morgan Stanley in the Treasury Borrowing and Advisory Committee. This just coming out as well. Morgan Stanley planning to offer Bitcoin and crypto trading to their E-Trade clients. Morgan Stanley developing plans to introduce crypto trading on its E-Trade platform in 2026, marking the most significant move by a major U.S. bank to provide retail investors direct access to Bitcoin and crypto amid easing regulations. To put into context for you guys, Morgan Stanley, when they acquired E-Trade, the combined entity had approximately 6.8 million households. E-Trade brought in 5.2 million client accounts with 360 billion in retail client assets, which were added to Morgan Stanley's existing 3 million client relationships and $2.7 trillion in client assets. This document is widely accessible. You can go and search this on your own. And yeah, I don't know what else to say, guys. This came out last night. Huge document, huge impacts. Stablecoin surged due to regulatory clarity and integration into finance via the Genius Act and other regulations. Then the rest of crypto will likely be growing in tandem, especially ecosystems dealing with real-world assets on chain, tokenized real-world assets, as literally this digital money document from the Treasury Borrowing and Advisory Committee literally mentioned, RWAs and tokenization, especially ecosystems that tie in kind of that institutional grade DeFi. A lot of people maybe have heard of DeFi, but I think, one thing, interesting thought experiment to do is once we have regulatory clarity and these real world assets are tokenized on chain, they're not just going to tokenize them for the sake of tokenizing them. It's kind of like, what do you do with them once they're tokenized, right? Traditionally, e-liquid assets then become liquid. Potentially gain or garner yield from them. You can borrow against them. You can do all sorts of things that exist right now in DeFi with invented money, just with real world assets that have been tokenized. And one thing obviously to pay attention to is the underlying infrastructure. You literally have the Treasury and the Treasury Borrowing and Advisory Committee saying that given that regulations, they expect it to be very possible for stablecoins to hit a $2 trillion market cap within 3 to 5 years. I think about the infrastructure of what these networks represent as a whole, and it's going to be wild to witness. So I hope you guys enjoyed this video. I can't promise that I'll always find crazy stuff, but it seems to be a kind of a back-to-back type thing here. If you're interested in some of the podcasts that we do through Genfinity, give us a follow at Genfinity.io. We have some interesting ones that we're working on behind the scenes right now. We just interviewed Deloitte a couple of days ago. And yeah, looking forward to some more content. So hope you guys enjoy this. Let me know, like and subscribe if you like this content, share it with your friends, and I will see you guys when I see you. Thanks. Bye.